Apollo's ACRED fund, Real Wall Street Money, just launched the first major tokenization project, and they didn't pick Ethereum. They didn't pick Solana, they picked SEI. And if you think that's just another partnership announcement, you're about to miss what could be the quietest institutional play of 2025. The charts are setting up, the fundamentals are screaming, and SEI is sitting at a price point that won't last. Let me show you what's really happening. Welcome back to the channel. If you're serious about catching moves before the crowd does, smash that like button and subscribe because we're diving into a story that combines Wall Street credibility, explosive stablecoin growth, and technical setups that could deliver serious upside. Let's get into it. According to a recent analysis shared on X, Apollo's ACRED fund has officially launched the first major Wall Street tokenization project built directly on SEI. This isn't some DeFi experiment or another NFT marketplace. This is traditional finance, serious money with serious compliance requirements, choosing SEI as their infrastructure layer. That alone should make you sit up and pay attention. Now, SEI has been flying under the radar for months. It's not the loudest layer one out there. It doesn't have the army of shillers that some other chains have. But what it does have is something far more valuable: real utility, real adoption, and now, real institutional backing. When Wall Street picks your blockchain for tokenization, that's not speculation anymore, that's validation, and validation moves markets. But the Apollo news is just the opening act. The real story gets better when you look at what's happening with stablecoins on SEI. Stablecoin market cap doesn't lie. It tells you where liquidity is flowing, where users are parking capital, and where the real on-chain activity is happening. And on SEI, that number just hit $276.8 million. USDC is dominating with an 84.5% share at $233.7 million. And here's the crazy part. That's up 54% quarter over quarter, not year over year. Quarter over quarter. That's explosive growth by any measure. And if you think that's impressive, check out USDT. It surged 464% quarter over quarter to $27.4 million. 464%. That's not organic growth. That's a flood of capital rushing into the ecosystem. Add in PayPal's PYUSD natively integrated into SEI, and you've got a perfect storm of accessibility and liquidity. PayPal isn't betting on ghost chains. They're betting on infrastructure that can handle mass adoption, and they clearly see SEI as that on-ramp. Now here's my take. Stablecoin growth is one of the most underrated bullish indicators in crypto. When stablecoin market cap is climbing this fast, it means real users are moving real money onto the chain. It means they're preparing to trade, to invest, to build. It's not just speculation, it's capital deployment. And when you combine that with institutional projects like Apollo's ACRED fund, you're looking at an ecosystem that's transitioning from potential to performance. Another expert recently highlighted a data point that's flying completely under the radar. According to this analyst, SEI's decentralized exchange volumes are about to close their best quarter yet as September wraps up. Best quarter yet. That's not a minor uptick. That's a surge in activity that signals deeper liquidity and growing utility across the entire network. When DEX volumes are hitting record highs, it means traders are actually using the chain, not just holding tokens and hoping for a pump. So let's connect the dots here. You've got institutional validation from Wall Street. You've got stablecoin market cap exploding at triple-digit growth rates. You've got DEX volumes closing at all-time highs. And you've got a token price that's still sitting under $1. The question isn't whether SEI has fundamentals. The question is whether the market has caught on yet, and based on current price action, I'd argue it hasn't, not fully. Now, I'm not saying this is a guaranteed moonshot. Crypto doesn't work that way. But when fundamentals align this cleanly, when institutional adoption, liquidity growth, and on-chain activity are all pointing in the same direction, ignoring it would be foolish. The market rewards attention, and right now, SEI is not getting the attention it deserves. That won't last forever. Let's talk technicals because the charts are backing up the fundamentals. SEI recently bounced off the lower boundary of a horizontal channel, a level that's provided consistent support. This isn't a random bounce. It's a technical level that's been respected multiple times, and buyers just defended it again. The setup points toward an upside target between 34 cents and 35 cents in the coming weeks. If momentum holds and we get a breakout from this channel, that could confirm the bullish scenario that fundamentals are already suggesting. Now, zooming into the shorter time frame, the 1-hour chart shows SEI trading inside a descending channel with a recent bounce near the $0.2719 support zone. Buyers stepped in and prevented a deeper breakdown, which is encouraging. The chart projection outlines near-term targets at $0.2768, $0.2805, and $0.2858 if bullish pressure continues to build. These aren't moonboy targets. These are logical resistance levels based on the structure we're seeing. Key technicals here. Multiple moving averages are sitting overhead as resistance, which tells us momentum is still tilted slightly bearish in the short term. However, and this is crucial, the RSI is at 36.72, which puts it in oversold territory. Historically, when RSI dips into oversold on an asset with strong fundamentals, it often precedes a relief rally or short-term reversal. Translation? Conditions favor buyers if they can seize control and push past the upper boundary of this descending channel. But let's be real. If SEI fails to hold the support area around 27 cents, the bullish thesis weakens significantly. A breakdown below that level would hand control back to sellers and could trigger lower retests. That's the risk. That's always the risk. No setup is bulletproof, and in crypto, respecting your stop losses is how you survive long enough to catch the big moves. Here's my expert opinion. The technical setup is constructive, but it's the fundamentals that make this compelling. SEI isn't just reacting to speculation. It's being shaped by real demand. Institutional projects, stablecoin inflows, record DEX volumes. When technicals align with fundamentals this clearly, you've got an asymmetric opportunity. The downside is limited by strong support levels. The upside? If this breaks out and fundamentals continue to strengthen, 34 cents to 35 cents is just the beginning. Let's zoom out for a second and talk about why this matters for your portfolio. Layer 1 plays are notoriously difficult to time. Most of them pump on narrative alone, then collapse when the hype fades. SEI is different because it's not relying on narrative. It's building real infrastructure, attracting real institutions, and generating real activity. That's rare in crypto. That's what separates projects that survive from projects that disappear. The Apollo Tokenization project is a game changer. Wall Street doesn't move fast, and when they commit to a blockchain, it's after months of due diligence, compliance reviews, and technical audits. They picked SEI. That's not luck. That's infrastructure that meets institutional standards. And once one major institution builds on a chain, others follow. That's how network effects work. The stablecoin growth is equally significant. A 54% quarter-over-quarter increase in USDC and a 464% surge in USDT aren't flukes. That's capital flooding into the ecosystem because users see opportunity. Stablecoins are the lifeblood of crypto trading. When they're growing this fast on a chain, it means traders are positioning for action. It means liquidity is deepening. It means the ecosystem is maturing. And those DEX volumes? That's proof of utility. Anyone can launch a blockchain and claim it's fast and cheap. But when traders are actually using the chain to execute trades, when liquidity is growing organically, when volumes are hitting record highs, that's validation from the market itself. The market doesn't lie. It votes with capital, and right now capital is flowing towards SEI. Why isn't SEI price higher if the fundamentals are this strong? Simple. Markets are inefficient. Price discovery takes time. Retail hasn't caught on yet because SEI doesn't have the hype machine that some other Layer 1s have. But that's actually the opportunity. By the time everyone is talking about it, the easy gains are gone. Right now, you're still early. The fundamentals are in place, the technicals are setting up, the narrative hasn't fully caught fire yet. That's your edge. So where does that leave us? SEI is sitting at a fascinating crossroads. Institutional validation, explosive stablecoin growth, record DEX volumes, and a technical setup that's pointing toward higher prices. If you're looking for a Layer 1 play with real fundamentals backing it, this deserves to be on your radar. I'm not saying ape in blindly. Do your own research, check the charts, watch the support levels. But don't ignore this just because it's not the loudest token in the space. If you found this analysis valuable, go ahead and check out my other videos where I break down similar setups across the market. And as always, hit that like button and subscribe if you want more analysis like this delivered straight to your feed. I appreciate you being here. Let's catch these moves together. Quick reminder, this is not financial advice. Crypto is volatile, unpredictable, and you can lose money fast if you're not careful. Never invest more than you can afford to lose. Always do your own research, manage your risk, and trade responsibly. Stay safe out there.